Depolarization reduces the political or economic influence of dominant countries, reshaping global power dynamics. Recent shifts suggest a depolarization trend with deep economic implications. Economic depolarization affects global trade, currency stability, and investment patterns. It leads to a multipolar world where power is distributed among several nations. This creates opportunities and challenges for global economies. Countries may gain more autonomy and negotiate fairer trade deals. However, increased competition and uncertainty are potential downsides. The end of the petrodollar agreement between Saudi Arabia and the US is a significant indicator. This move shakes the foundations of long-standing global economic systems. Understanding these dynamics is crucial for anticipating future economic trends. Several key events signal global depolarization. The rise of China as an economic powerhouse is a major factor. China's Belt and Road Initiative extends its influence, reducing dependency on Western economies. The Brexit referendum in 2016 highlighted shifting global alliances. The US-China trade war disrupted global supply chains, encouraging economic diversification. These events collectively signal a move away from a unipolar world dominated by the US. We are witnessing the emergence of a more balanced global power structure. This shift has profound implications for economic policies and international trade. Countries are rethinking their economic strategies in response to these changes. The global economy is moving towards a more multipolar world. Saudi Arabia's decision to end the petrodollar agreement is groundbreaking. For decades, Saudi Arabia priced its oil exports exclusively in US dollars. This agreement ensured steady demand for the US dollar, bolstering its reserve currency status. The termination marks a significant shift in global economic dynamics. It reduces global oil markets' dependency on the US dollar. Saudi Arabia's move reflects a broader trend of diversifying economic partners. This decision indicates a shift in Saudi Arabia's foreign policy and economic strategy. The end of the petrodollar agreement may lead to fluctuations in the US dollar's value. It could trigger a shift towards other currencies or commodities for international trade. This development underscores the broader trend of depolarization. Gold is gaining prominence as a stable store of value amid economic challenges. Historically, gold has been a safe haven during economic uncertainty. With the end of the petrodollar agreement, gold's role is becoming more significant. Countries are diversifying their foreign reserves by increasing gold holdings. Central banks worldwide, like those in Russia and China, are increasing their gold reserves. Gold offers advantages as a reserve asset: universal acceptance, intrinsic value, and independence from any single country's policies. These attributes make gold attractive for reducing reliance on traditional reserve currencies. Gold's value tends to rise during economic instability, providing a financial buffer. The increasing role of gold reflects broader changes in global economic dynamics. This shift could lead to significant changes in global financial markets. Depolarization has significant implications for the US economy. The end of the petrodollar agreement and the rising importance of gold could alter the economic landscape. The US has long benefited from the dollar's status as the primary reserve currency. This status allowed the US to borrow at lower costs and maintain a high standard of living. With the petrodollar agreement ending, demand for US dollars in global oil markets may decline. This could lead to a depreciation of the dollar's value and higher inflation rates. The US economy may face increased competition in international trade. Depolarization encourages innovation and competitiveness. The US can leverage its technological advancements to adapt to the changing global landscape. By fostering stronger economic ties with emerging markets, the US can remain a key player. The global economy will experience significant repercussions due to depolarization. Traditional power structures are shifting, requiring adaptation to new economic realities. Emerging economies may find new opportunities to assert their influence. Countries like China and India could play more prominent roles in international trade and finance. This shift could lead to more balanced economic relations and reduce Western dominance. However, it introduces new challenges, such as increased competition and potential geopolitical tensions. Global financial markets may experience increased volatility. Investors may seek safer assets, like gold, during economic turbulence. International organizations will need to adapt to these changes. They will play a crucial role in facilitating the transition towards a more multipolar global economy. Several potential scenarios could unfold as a result of depolarization. In one scenario, we may see a smooth transition towards a more balanced global economy. Countries will adapt by fostering stronger partnerships and embracing innovation. This scenario would likely lead to increased global cooperation and stability. In another scenario, the transition could be more turbulent, with economic competition and geopolitical tensions escalating. The role of international organizations will be crucial in promoting dialogue and cooperation. The rising importance of gold suggests a potential shift in how countries manage their foreign reserves. Gold could become more prominent in global financial systems, influencing investment strategies and trade policies. Depolarization represents a significant shift in the global economic landscape. By understanding and adapting to these shifts, countries can position themselves for success in the evolving global economy.